If taxes are a four-letter word to you and your business, today we're going to talk about different strategies if you're running a professional service business or maybe even a software company in the age of AI, how you could turn it from something that's maybe a chore to a strategic opportunity, growth engine perhaps. Tal, appreciate you for joining us on the pod, Bootstrapping to Billions.
Thank you for having me, Chris.
All right, so we're going to get into it today. This is going to be an awesome episode. Definitely stick with it to the end. But for the audience listening, right? So they don't know yet. They don't know why they should listen to this episode. I want to kind of paint the picture. Why stick to the end? Could you give us like a little?
Yeah, we're going to talk about professional services businesses, how they can reduce their tax bill, how they can strategically think about their tax situation. We're going also to talk about how to think about structuring entities around that and how to spin off these kind of companies and how it all relates to money and taxes, of course.
Dig it. And for the folks at home, a lot of folks, building a business, most of the audience, we're in the weeds already. We're boots on ground. We're operating these companies. Many folks have seven-figure, trending towards eight-figure businesses already. A lot of our audience is in that professional service space, or they're building software. This is going to hit home. It's going to be close. We're going to turn something that oftentimes we dread year end, our taxes, into something that's hopefully going to be a little bit of a positive. But before we even get into the meat and potatoes, I wanted to just like set scope, right? So this is an opportunity to get to know you a little bit, as well as the brand that you're building, and why the content that we're going to drop today is going to be quality content for them to be able to pick up, listen to, and then apply into their business. How did you get into this game?
Yeah, well, okay. So, by the way, this is an Israeli accent. So, originally, I'm from Israel. I know that I hide it really well, but originally from Israel, born and raised. I moved to the US for my wife. I served in the Israeli intelligence in cybersecurity, and that's kind of like how I started. So, I'm a tech guy originally. After the army, I started a couple of companies, some of them more successful, some of them less successful, and that's kind of like what led me to the world of taxation. Because the moment that you start to make significant amount of money, you start to have tax problem. And after one pretty traumatic experience, that's what led me to Gelt. And Gelt is my company. We are basically a tech-enabled tax service. One side of the company, we have CPAs and tax professionals here in the US. The other side of the company, we have engineers, product managers, designers building our tax technology. And we really rethink about taxes from the ground up. If you would reinvent the whole tax business from scratch, how would it look like? And that's what we are building. And when I say tax services, we're doing only US taxes, so US income taxes specifically, and it's really split into compliance, planning, and strategy that we can discuss in more in length later on.
About to say that it's bootstrapping to billions, right? But it's really the collective us. It's all of us, building together, building better together. And you guys just celebrated a massive milestone, which, we are friendly as well to folks raising. So you just raised 13 million in your Series A, which is a phenomenal milestone to meet. And there's, I'm sure, a story behind. I'm sure there's a purpose and a why that we should probably get into and also talk about in terms of the product that you're building, bringing to market. But the folks that you build for, right? The folks that you build for, if you were to paint the picture of kind of like the best person to come in and utilize the platform, who would it be?
Yeah, by the way, before I get into that, like one maybe funny thing, like this is my first venture-backed company. All of my previous companies were bootstrapped. So I have huge respect for all of the bootstrappers out there that are grinding and making it work. It's not easy for sure. And for our ICP and who we are building for, we are mostly building for business owners, and we are taking usually the business and the owners of the business. So think about physicians, architects, consultants, professional services. That's kind of like our bread and butter. But people are profiting at a minimum, let's say $250,000 minimum profit up to like a couple of $1 million in profit.
Definitely our audience for sure. I think honestly, probably a good exercise, boots on ground exercise would just be to speak. So if we were to talk about that ICP, there's a lot of folks listening at home that fit that checkbox. They're looking at their business today and they're like, all right, we're getting there. We're like 1 to 10 million. We're definitely putting some profit in our pocket. We're trending in the six figures for sure, hopefully towards seven in profit in pocket. But every year we have to put this money aside and something comes out, right? So what would we talk about in terms of how that professional service business owner can approach from a strategic perspective, taking this seasonal chore, this thing that we all kind of dread,
Yeah.
into something that's maybe a little bit more strategic that could, hopefully land us with a little bit more profit.
Yeah, for sure. I want to start with a baseline, like how to think about taxes. Let's start there. So when you think about tax services and the problem of taxes, you have multiple solutions. Solution number one of the problems is tax compliance. Basically, what you need to do in order to stay out of jail, because the government, they need to fund all the good things or not so good things that they are doing, and we are the ones to actually pay for that. And the tax compliance is basically how do you take all the information and properly and legally report that to the IRS and other tax authorities on the state and local levels, in order to stay out of jail. So that's service number one. Service number two is called, tax professionals will call it tax planning.
Mm-hmm.
Tax planning or tax estimates, basically, it's about how do you pay your taxes throughout the year. So you have two components to tax planning if you think about it. You have the tax liability. Tax liability is how much tax you need to pay, and then you have the tax payments, is when and how you pay the liability. It's two completely separate things,
Mm-hmm.
by the way. You can optimize the liability and you can optimize the payments, two different problems. And that's service number two that you as a business owner should think about. How do I know how much taxes am I going to pay? And then how do I pay it? At what time frames? What do I do? And what are my options? It gets complicated there as well.
Mm-hmm.
And finally, you have the tax strategy. Tax strategy basically helps you to minimize your tax liability to the minimum allowed by law. And with the emphasis of by law, because at least we at Gelt, we are not in the business of doing anything shady.
Yes.
So we're not here for that. We worked hard. You worked hard. You build a good business. Don't risk it of in getting in jail because you try to be shady with your taxes, by the way, and you don't pay that
Important
much.
asterisk to add into
Yeah,
this
yeah.
episode.
Just in general, like stay compliant. Don't go to jail. Like, protect yourself. Your freedom is more important than anything else, honestly. But that's tax strategy. How do you minimize the tax liability to the minimum allowed by law? Those are the three areas of taxation that you want to think about. And as business owners, like, you have different complexity to each one of those. But that's the baseline. And a lot of people are doing the number one, the tax compliance, and sometimes the number two, but they don't really have the number three as much.
Mm-hmm.
But we can take it from here and
Yeah,
break it
let's
down
break
one
this
by one.
down. Quite literally. I mean, I'm super pumped for this episode, and I'll tell you why. There's always a little bit of a why behind it. You've been creating a ton of content. You've put a lot of information out there. You're definitely the subject matter expert for sure. And I'm sitting here as the ICP listening as this audience. We have an advisory firm ourselves, and I'm like, oh man, I got to write this stuff down. So I got the pen, I got the paper, and I'm looking a little bit selfish. So be a little bit selfish to be selfless, to be selfishest for the audience listening. And I want to get the most out of this episode. So we got the three things. We got tax compliance. That's really like the get out of jail. That's the stay out of the jail card in a sense.
Right.
We got the tax planning, which is liabilities and payments, which we'll subcategorize each. Definitely curious in terms of how we ring fence those. And then we got the strategy aspect. And that's all about, minimal viable asterisk by law. So let's break down each of these. So if we were to talk about the if you were to ask yourself, which is the fun thing first, what
Well,
would
the
your
fun
response
things,
be?
it depends on the person, but obviously strategy is the fun thing.
Let's
And
save that for last then.
yeah, yeah.
Should we
I
start
think,
with
I think,
compliance?
Yeah, I think that let's start with compliance. But compliance, I think that when a lot of the time people are either like let's start with the industry. You have three different types of providers. You have like the, TurboTax,
Mm-hmm.
H&R Block, this kind of stuff that you just go online and put the data yourself and self-sign it.
The DIY.
Sometimes it has an assistant. That's option number one. Then you have the mom and pop shop that you go to, to the local CPA. You come to them with, a bunch of paperwork. You put it under desk, and they are doing that for you. And then you have like the boutique firms slash high-end firms that you have a more of a spectrum there, but it's going between like high-end like small
Larger
firms to
bill.
like the big four. And usually the ones that to deal with like you see compliance in all of those levels. It's just the complexity of compliance goes up. And
Hmm.
I'll explain what complexity means. If you have multiple states, for example, or you're operating as a business in multiple states,
Hmm.
you have the question, how do I know if I need to file taxes with like the state of California, the state of New York, or whatever other place you're doing business in? And that's those questions start to get complicated because each state has its own standards and they have their own things that they require you to do. But generally speaking, a lot of the time, that's the service that people least appreciate because for them is like feel just like it's a necessary evil in
Yeah.
their lives. And usually those kind of stuff, this kind of stuff, it's really important to get it right because penalties, for example, if you have a foreign investment, like you invested in some foreign fund or some foreign real estate project through a partnership, it can be really complicated to report that, and the compliance cost can go up very quickly. So
Yeah.
it's really important to work with somebody who are very transparent about the fees and how it's going up and down, so you can make also your decisions about how you expand your business or where you put the money, understanding the cost of reporting all of that to the IRS. We have multiple clients that they did not think about the compliance costs, made like $10,000 investment in offshore vehicles, and now every year reporting they need to pay $1,000 just to report those offshore companies
Yeah.
in on their US taxes, and it's completely diminishing their returns.
Yeah.
It's very time consuming, I would say.
So the
Technology
goal is
helps a
what?
lot.
Simplicity then, right? It's taking this potentially extremely complex thing that really needs to be done well. This is all about
Simplicity
organization
and
and
accuracy, I would
execution,
say.
accuracy, and then
Yeah,
turning
you
into
want,
something
yeah.
that's simple.
A lot of the time, like it will affect your decision. So if you're coming to me, Chris, and you tell me, hey, my buddy like told me about this kind of like really great real estate project in Costa Rica,
Hmm.
and you're our clients, and you would probably shoot us a message and say, hey, I'm thinking about investing in this kind of like Costa Rica project. Like, what should I do? Like any interesting tax thing happening there? We'll tell you we need to look more into the deal for the tax strategy part, but keep in mind that if it's a partnership, it might create like certain reporting obligations were very expensive
Yeah, which become a
because of
burden.
the laws. You want to keep it simple on one side, but mostly when you're making decisions, investment decisions, you want to make sure that you take into account how much headache it will cause you at the end of the year, collecting documents and then reporting everything. So that's what I would say about compliance. Accuracy is very important because you don't want to get hit by like penalties from one side on the other side, and the other thing is just to make sure that you understand the cost. That's about compliance, and it is what it is. I see it as a necessary evil, but
Yeah,
it
but it
is
seems that
necessary.
foundational. It's important, right? So
Right? Yeah,
you're checking the boxes, so stay out of jail. So you're
yeah,
you're making sure it is what is, right? And then at the same time, you're proactively able to collect information to help inform a good timely decision. So maybe
correct.
something is less appealing if you get the facts and you realize, oh, there's a little bit of a burden. Like, let's not do this.
Yep.
Costa Rica's off right now. Let's not do this deal. So it's something that's it's a necessary evil, but it's important.
Correct. Correct. That for sure it's something don't neglect it because the moment that, for example, we have some clients, not a lot honestly, but coming to us and they forgot to file for the past year or they missed the deadline. And the moment that you miss the deadline, automatically there are penalties. The IRS does not like inform you about the penalties ahead of time. They just tell you, hey, you were late. Penalties. That was wrong. Penalties.
Yeah.
You just get the bill. You don't really get any heads up
Yeah, which is
by
wild,
anybody.
right?
It's
Yeah,
your
seriously.
responsibility, which I think it's one of the beautiful things about America. For the best and for the worst, you're responsible for your own life and you're responsible to do the right thing. For the worst in this case, but also for the best in many, many other cases.
Extreme ownership. Yeah, absolutely.
Exactly.
Yeah, true. And yeah, we're building, so we're all about building ownable businesses here. So step one is compliance. Step two is the planning aspect. Right. So
Yeah.
what does that even mean? Like planning is, everyone has a plan until you get hit in the face. What do we talk about when we're talking about the tax planning side and we're specifically the two aspects that we mentioned earlier in the pod, liability and payments. And what's the difference
Correct.
between the two?
Yeah, of course. Let's start with tax liability. Tax liability is basically how much taxes do you need to pay to the federal, state, and local governments based on your income. So you work hard, you generate income, like each one of the jurisdictions that you need to pay taxes in, they will want their share. The final bill on each one of those jurisdictions is your tax liability, and the aggregate of all of that together is your total tax liability.
Mhm.
That's basically what tax liability is. It's basically the bill that you need to pay for each one of the places that you are obligated to file taxes in. The tax payment is how you pay it. So because especially as a business owner, like if you're a W-2 employee, it's very simple. Your employer, usually you're giving basically when you on board to the new employer, you're filling out a form. The form dictates how much withholding the employer is going to take away from you, and the employer is paying all the taxes on your behalf to the government. The taxes that the employer is paying on your behalf to the government is going towards your tax liability bill, basically. So at the end of the year, you're looking at, okay, what was my liability? Let's say $100, and the withholding was $110. You will get a $10 refund in that situation. And the employer did all of that for you. You didn't have to think about it too much beside like determine like what withholding they're going to take, which they calculate most of the time themselves. You can adjust it, by the way.
Mhm.
But that's where it becomes more complicated. If you overpaid, if you paid $110 in taxes throughout the year on $100 liability, it means that you just paid $10 or 10% of your liability to the IRS for nothing.
Yeah.
Like you just gave them an interest-free loan.
Quite literally, yeah, floated.
Yeah, literally, like you're not going to get any interest in return. On the other side, if you underpay them, like let's say that you pay them like $70, if you just took the $30 extra and put it in your bank account and then you will pay it when the bill comes, that's also not that beneficial because you just like kept a lot of cash without doing anything with it beside everything in the bank account. But if you're taking the $30 and you invest it, you put it more time in the market, you put it in a money market fund even,
Mhm.
or in stocks, depending on how you like and what you want to do with your money.
Risk tolerance, yep.
And you're getting some kind of like a interest or return on that money, you have basically pure gain on that amount. Now, the IRS says that in order, like if you're underpaying throughout the year way too much of your taxes, they are going to charge you interest and penalties. So let's say that you have the $100 tax bill. Generally speaking, if you're a business owner, you don't have a W-2 or an employer to pay the taxes for you. It's your responsibility to do it for yourself. Generally speaking, you need to pay quarterly estimates every quarter. So the quarterly estimates are April 15th for Q1, June 15th for Q2, September 15th for Q3, January 15th of the following year for Q4,
Mhm.
and final payment of any balance on April 15th the following year.
Mhm.
That's basically the schedule of when you need to pay taxes. And it's completely at the pay the liability. Now, if you don't pay some of the liability on the time, the IRS might charge you interest on that,
What's the
interest and
threshold
penalties.
for that? Yeah, what would be the threshold on the liability?
So there is something called safe harbor. The safe harbor basically means that you need to pay either 110% of your last year's tax liability or 90% of your current year tax liability, which is really funny because at the end of the year, you don't know how much will be, you don't really know what will be your tax liability during the year. You know it only after you received all the money. That's when you know really when the liability, but that's basically the safe harbor. So as long as you pay at least 90% of your liability throughout the year for the current year, or 110% of the liability of the previous year until um, January 15th, you will not pay penalties and interest on April 15th, which is the time to pay the difference in the bill,
Mhm.
basically. So let's say the last year I got $100 in tax liability, and this year I doubled my profit.
Mhm.
Really great year of business. It's $200. So generally speaking, you need either to pay $180 this year because it's 90% of the current year liability, let's say, or you need to pay 110%
10.
of
Yeah.
last year. So if it's like $100, you need $110
Hmm.
throughout the year.
So you could have
So
a
180
$70 variance there, right?
exactly. 180 to 100, 110 to 180 because you pay practically if you pay more than 110 throughout the year, you'll have no interest or penalties when tax time comes at the end of the year. And then you have the question, how do you figure out how much do you need to pay? Do you want to skip? Maybe some people, if they are inventory-based businesses or they need the cash flow, some people skip Q1 and Q2 estimates. They keep the money and pay other bills with that, and they do like catch-up payments on Q3, Q4, and the final payments
Hmm.
knowing that they are going to pay the penalties and interest on the first 3 months of the year.
Hmm.
And there is a lot of decisions and it's very personal depending on the business. I personally, of course, I want throughout the year to pay the minimum amount of money legally possible to avoid paying too much penalties. But I personally like, for accuracy purposes, I prefer to just absorb like the Q1 and Q2 and pay zero. I don't want to pay Q1, Q2. I want to see how the year goes. Basically, maybe I'll pay a little bit if I know that it's a very good year just to avoid like large bills at the
On
end.
the backside. Yep.
And then Q3, Q4, and final payment, I will do the catch up.
Hmm. Yeah. So
So th
essentially, what we're saying is first you got to know it, and then you got to flow it.
exactly.
And
And you
if
have a
you don't know
guess,
it, you can't, which
and
is a
it's a
problem.
problem.
That's a real
Yeah,
problem.
yeah. And like that's maybe a good time to emphasize if you're a business owner, how important it is to have financial statements. So your tax liability is not determined by like your income and expenses. Like if you bought a car for like $50,000 on and oh, that's let's say that that's what you paid. You're not going to deduct, depending on the type of car, honestly. In most cases, you will need to depreciate the value of the car over time. So even if you paid $50,000, it doesn't, and let's say that your income was $100,000, you paid $50,000 for the car. We will not calculate your tax liability based on $50,000 of profit, because the way that the car is going to be accounted for your taxes is not dollar to dollar. It's not one-to-one basically ratio. So that's why it's so important to have financial statements. Financial statements are profit and loss statements, balance sheet statements, and really be organized on the finance side to make sure, because we cannot tell you what will be your liability if we don't have access to the numbers. And those are kind of like the standardized way that like business owners need to pass the numbers to their tax professionals. Make sure that your financial statements are in place and you have it at least monthly or quarterly so you can see the numbers, the real numbers of your business, because a lot of the decisions will be based on those numbers.
And I mean, it feels like it makes sense, right? So first and foremost, just to recap what we've talked about thus far, first you got to know, what boxes to check, which may or may not be a lot, right? That may or may not be a complicated thing unto itself, right? Then you got to step two, know it in order to flow it, which also allows you to be able to plan for it and make better decisions of where you're gonna, stash that cash, so you're not floating it to the government on interest free. And maybe put a little
Yeah,
bit more profit in your pocket off of it, right? But realistically, that feels like it could be a lot. It feels like there's a lot going on. You're a business owner, you're running a healthy business, right? You're that professional service business owner, or maybe you're even thinking about, a SaaS or something of that nature as well, across the board. Like life is a very real thing. And as a business owner, it only gets harder. Is there a simple way? Like what would be a simpler way of approaching this? How do you manage everything?
I can tell you, me personally, I'm a client of my own company. I'm paying a lot of money for my own company to manage all my business situation, and I outsource it. I have the knowledge to do it myself. I don't want to do it myself. Like I have better things to do. I need to focus on building the company. I need to focus on growing the company. Like the best advice I can tell people, which is what I do with my knowledge and everything, just outsource it. Like your time is more valuable elsewhere. Make sure that you have the financials organized. Make sure that you get competent tax professionals to help you organizing it. Make sure that they are organized as well, because that's a different story. But for example, at Gelt, we build like a whole system just to manage the tax estimates.
Hmm.
There is a big portion just related to estimates and how to determine estimates and then how to manage the payments, and that's a whole area by itself. But really outsource it. Focused on being organized. Focus on getting competent professionals to take that headache away from you, but still communicate it properly throughout the year
And so
because it's an ongoing thing.
you're quite literally you're dog fooding this. You are
Okay.
using your own product. And earlier in the episode, we mentioned the fact that you guys just hit a major milestone. You raised 13 million. Where
Yeah.
is that capital being allocated? What is the product that you're building, and how can that ultimately help some of the folks that are listening? Like what's being created in the labs?
Yeah, of course. So the way I think about it, I split it into two. We have the tax operation of the company, and then we have the R&D and marketing. The tax operation in the company is profitable business. Like if we just took everything and put it as a separate business, it's a good business by itself.
Hmm.
The money is really going towards expansion of the product and our AI offering and the marketing to build a bigger business. So in our situation, for example, in Q4 this year, we're releasing a new feature for business owners that scans their personal bank accounts, their credit cards, their Costco cards, for example, and all the Chase card that they have, including the Amazon as well, finding expenses, day-to-day expenses that was supposed to be like maybe business expense. Oh, you bought a printer? Obviously, that's an office equipment, and you bought the printer not because you like to print stuff, because you needed that for the business for, office reasons. Like we will detect those type of expenses that you might forgot about those or just used another credit card because of the points or the cashback, and we are going to basically get a reimbursement for you for those expenses. So that's a simple examples. There are more complicated examples about QBI, retirement and salary balances for S corp owners that are a bit more intricate that takes into account more variables. But like we want not just to tell you what you need to do, we also want to create the right automations to do it for you.
Mm.
Because what we noticed is like, okay, you can go, you can know what you need to do. It's very simple to say, okay, I just need to review all my bank transactions on the personal level, find the ones that related to the business, and
Yeah,
move
but
them
that's
to
a
the
lot.
business.
That takes a lot of time.
That's a lot of time.
And
That's a
then
lot of
the
time.
things that we know are good for us, oftentimes, if it's hard to do, we just don't do it. Right? It's like, we
That's
all,
what we see.
diet, exercise, but it's easier to take the pill to a certain extent. So you are building a simpler way. You quite literally are building a simpler way. And then the way that you're building this business, you started with the services, which is a profitable part of the
Right.
organization, which a lot of our audience are in that same spot. So a lot of our audience are building professional service businesses. They're building profitable companies today. And then they are spinning up on the side these AI software, and it becomes almost like a software as a service that they're tagging on.
Right.
When you're thinking about this, because I want to make sure we get into the tax strategy aspect as well, and really give the minimal viable by law ways with asterisk 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 by law that some of our audience can, like, really take with them from this episode, and they're like, oh man, Tal gave us the goods. Like, he's our dude. He helped us out. What are some of the tax strategies for folks that are maybe in that space of either professional services, or maybe they're starting to play around with software and build out some SaaS? Like,
Yeah.
what would you take to that persona?
I would say that when you think about your strategy, it's split into three parts. Number one, it's the entity structure. Like, how do you choose which type of company you need to set up? And of course, everything that we're saying here, disclaimer, it's not a tax advice and
Yes.
consult,
Asterisk
and it's very
asterisk.
yeah, it's very personalized thing, like because different people, different states have different consideration. But the first thing that you want to keep in mind is the entity structure. Are you an LLC? Are you a corporation? Are you going to be taxed as an S corp, C corp, a partnership? Like which state you live in affects those decisions. So that's the number one thing that you want to nail down. What's your entity structure? And I will give two examples. If you have, for example, something very common that we are seeing, like people are coming to us, they have like an S corp, like let's say that there are two consultants or They are two consultants, professional services. They are partners. It's going really well. They set up an S corp because somebody told them to set up the S corp, and they operate their whole company through this one S corp.
Mm-hmm.
And let's say that they are also living in California. What's the problem in that, like in that pure type of like structure?
Mm-hmm.
They cannot, for example, if Chris, you and I were starting a new business, we're providing like some kind of service to other people. The business is generating $2 million a year, and we have each one of us $1,000 of profit that
Mm-hmm.
we take to our pocket. What you want to do with your money and what I want to do with my money is completely different. And the fact that we are both partners and personally on the S corp level, it really prevents us from doing that. For example, maybe you want to hire one of your children to help with the business and manage the social media.
Mm-hmm.
And let's say I don't have children right now. Would it be fair that you will hire your child through the business? Probably that can create a lot of
Yeah.
friction
Yeah.
between partners, and there are better structures to manage all of that. So the question number one, what's the structure? Like one of the best things that we're helping people setting up, create a partnership, own the partnership with the S corporations. So you have your own management company. I
Mm-hmm.
have my own management company. Own the partner, like own the business. Let's
Mm-hmm.
call it a Chris and Tal business.
Mm-hmm.
On the business through your S corporations. So the $500,000 each year goes up in K1s to our S corporations, and then what I'm doing in my S corp and what you're doing in your S corp is completely disconnected.
Mm-hmm.
So you have a very clean company, which is really the business, and then you have your family management company or your own management company. I have my own management company. And we don't need to get into each other's way. So it's good not just for taxes, it's good for relationship. So
Yeah.
that's an example of how like entity structuring is really important. You have more considerations with C corporations. If God forbid you have really a lot of healthcare expenses, in certain cases, C corporations are more relevant. We have a couple of clients right now that ended up like they have like between like 10 to $100,000 a year in healthcare expenses for themselves, for family members.
Mm-hmm.
And S corporations does not allow you, for example, to put it fully deductible in the business. But with C corporations, you have certain arrangement that allow you to put all the $100,000 as deductible on the business, for example.
Now, when you're looking at the entity formation side, do you take like a moment in time approach? So this is the entity of choice for right now, or do you take a end goal in mind approach of this is where we want to go, so let's get in the right vehicle?
Both. We need to ask what are you doing in the future? What are your plans? Are you going to sell it? Because if you're going to sell it, maybe we want to optimize for QSBS, which is
Mm-hmm.
also relevant for the AI
Mm-hmm.
that we'll talk about in a second. But maybe like it really depends what you want and how you want to build the business. And there are trade-offs. If you're making one choice, there will be a trade-off. If you make another choice, if you're an S corp versus a C corp, there are trade-offs between those two entity types. If you are going to sell the company, for example. So we are taking into account where you are right now, where you need to be in the future. And then when we share basically the entity structure and our plan for you
Mm-hmm.
based on your preference,
Mm-hmm.
we tell you, okay, those are the trade-offs here, those are the trade-offs there, It's up to you to make a decision.
Yeah.
And a lot of the time, because it's on the future, it's a bet. You need to take a bet, but that's your business, and
Ownership.
yeah, that's ownership. Yeah.
So, okay, so everything starts somewhere. We start with entity selection and structure.
Entity selection in structure. The next thing is really about expenses. The home usage for your business. You own a house, or you're working from home. How does like you need to be compensated for that? The IRS allows you basically to get compensated for that in two ways. Either home office deduction that has its own things and limitations, or the Augusta rule that allows you to rent your own house to your own business for up to 14 days a year
Mm-hmm.
without paying taxes on the personal level, but take it as a deduction from the business. You cannot do, in most cases, you cannot do both at the same time. So you need to choose. How do you, like, you need to choose. But that's an example of like an expense. We're going to company expenses. The car, like you want to buy a new car, of course, business car, and that is going to be used for the business. How do you do that? you have something called PTT in certain states. So if you're living in Connecticut, for example, quite high state taxes, there is something called pass-through entity taxation that allows you to pay your state taxes through the business and take it as a deduction from the federal. So it's getting complicated, but the next thing that we're trying to do is to push down basically the taxable income, and we do it by maximizing the eligible expenses for you.
Hmm.
Once you maximize that and you're feeling in a good situation there, and there are more considerations by the way around that. The QBI, the salary. As an S corp owner, you might have a reasonable salary there. It gets really complicated. But once you maximize that and you found your sweet spot, which is very individual, then you go to retirement. With the money that is left, how do you save it and invest it for the future? Do you hire your spouse to help with the business and you pay retirement for both of you? Do you hire your children and make them also save for retirement for the business? But there are different types of retirement accounts, and the way that you want to think about it is that you have like the retirement plan, which is the legal framework, like 401k, solo 401k,
Hmm.
SEP IRA, IRA. Those are four different plans with different limitations. And then you have the retirement accounts types, Roth retirement accounts, traditional retirement accounts, or pre-tax, post-tax retirement accounts. How do you balance between them? How much can you put in each one of them? Very personal decision, depending on how much profit you have each year. So it might change between years. And that's exactly why I recommend to a lot of our clients just like to get really proper guidance around it and reevaluate that each year as the business grows.
Yeah.
I do have like one more answer for what happens with the AI. So after we took all of that into consideration, let's say that we have the Chris and Tal consulting
Hmm.
that is doing really well, and we figure out, you know what, we have a killer idea for an AI app. You have a choice whether you're going to put the AI app inside the same company or you're going to separate it.
Yeah.
If you if you think it's going to be its own business, maybe sell it to somebody else at some point, and you want to keep it very separated, best practice would be to take all the AI capability and put it on a different entity. Also, there is R&D tax credits involved there, different like it's a complete different operations with different incentives that you want to keep it separate. If you put it together, you might lose some of those benefits. So a lot of the time, you separate it to a different company, and then you can even make it a C corporation in QSBS eligible. QSBS allows you basically to have up to like $15 million of tax exempt in case you are selling the company under certain conditions, like it must be a C corp, you must hold it for at least 3 to 5 years. There are a lot of conditions around that, but it might make sense to separate it to a different
Which
company.
is wild, right? And like this is all things in terms of consideration that we have the freedom to decide with as business owners. And the
Yeah.
place to start is the ability to know. And oftentimes it's like you don't know what you don't know. And that's why I'm so grateful for this episode because a lot of this information I feel like is still gatekept. I feel like a lot of this information isn't readily accessible to everybody out there bootstrapping a billions, right? So I'm super grateful for you to come on to this episode today and drop what has been a tremendous amount of knowledge. And I think that there's a lot of things that folks can pick up. And probably the most important thing is you just have to know enough to start. And everything starts somewhere, and you can develop a plan and hopefully they can reach out, right? So you just dropped a ton of value in terms of today's episode. Say somebody's listening in the audience right now and they're like, man, you checked all the boxes. I'm running a professional service business right now. We're doing, a couple $1 million. I got a partner. We got an S corp. What are we doing? And we're talking about doing an AI SaaS right next. And I'm like, oh man, where do I go? Where would they go to reach out and maybe, get in touch with you and say, hey, this is the right decision?
Yeah, of course. You can number one, you can reach out to me personally on my email. I'm answering everything like tal@joingelt.com, TAL at joingelt.com. You can send me a message or go to our website, joingelt.com, and schedule a call with our team. Everybody is super helpful. and we are happy to help anybody who is like relevant and we can save him on taxes. We really see it as our mission to help people pay less in taxes legally, of course.
Yeah, asterisk,
But
asterisk.
yeah, and I really appreciate, all the time and everything you asked. I think it's a really, really great podcast.
Yeah, this has been a phenomenal episode. You get more by giving than by taking, for sure. We're going to link in the show notes below without a doubt for anybody listening to be able to get in touch easy. Till next time, trust the process, commit to the journey.
Awesome. Thank you.
If I could do it all again.
Struggling business? It's time to exit with ownership. Join the Exit Studio. Build equity. Unlock capital. Exit with ownership. Keep it simple.
I feel nauseous, believe me. Never had a lot of shit come easy. Had to work hard, struggle just to be me. Had to rise up just so they could see me. Did what I had to do just to feed me. And what was left over I put towards my dreaming. But the only thing in life that has meaning are the things you gotta work for, believe me. Take into your hands a plan, your own hands can land your own brand. And damn, I feel like no one takes accountability. They want the credibility, convincingly unwilling to put in the hours it takes to get some power. Don't be fucking sour, take a cold shower. Scream until you're louder, work until you're prouder.
You gotta have that grit, that hustle to make it in this city. Never give up.